Hey, everybody. Good evening. And thank you so much for being here with us. You are tuned into another episode of Chart Request Live, the show where you pick the charts that we go over. If you guys have followed us on social media, or if you're a TrendSpider user, you've probably heard a ton lately from us about the GoNoGo indicator. Well, we are very, very fortunate tonight because we have the creators of the GoNoGo indicator on the show to go over the charts that you guys are picking. We've got Tyler Wood and Alex Cole. Tyler, Alex, how are you guys doing this evening?
Feeling pretty good. How are you, Jason?
I'm doing great, man. I'm really happy to be here. So let's do this. Before we get into the charts themselves, let's talk about you guys a little bit. Introduce yourselves. Tell us a little bit about how, your background, how you got in the business. And then also for any of our viewers who aren't familiar with the GoNoGo indicator, maybe they haven't tried using it yet, or maybe this is their first time seeing it. Maybe take a few minutes and talk about what we're seeing here.
Absolutely. Alex, why don't you kick us off?
Yeah, so pleasure to be with you, and we're excited to run it on some charts. I worked for almost a decade and a half in institutional finance, mostly with Bloomberg, and so technical analysis became my area of focus, and I really just fell in love with the discipline, and went all the way down the rabbit hole. And I've worked with Tyler all the way through that career, really training. We did presentations together to train new hires into Bloomberg. We trained clients of Bloomberg. We've worked together at Wiley to create the prep course for the CMT. People might, if they know about that, they might be sick of me by now with 110 odd video lectures that we created. But yeah, we've worked together for a long time and really, really, in the technical analysis space. And that's sort of how we ended up creating this, but I'll let Tyler introduce himself as well.
I'm going to go a little deeper, or at least start a little further back. I got a liberal arts education, which meant I was heavily in debt and unemployed. Both Alex and I were. And then after my first job out of college, had a great mentor and a great boss who said, you should go get an MBA so that at least the next person who hires you knows that you can do something worth value. And in most MBA programs, I went to the Kelley School of Business at Indiana University. You're taught nothing but the fundamentals. How do you manage a corporate balance sheet? You're thinking about corporate finance issues and valuation metrics, rule all. And then I found myself in New York City following the love of my life as she went on to do a postdoctoral work at NYU. And I met this group of people then called the Market Technicians Association. It'd been on Wall Street for about 50 years now. Now it is called the Chartered Market Technicians Association, or CMT Association. I know you guys work with a ton of CMTs, Brian Shannon and lots of other really expert analysts and traders and portfolio managers. And so that organization basically had to re-educate me on how markets work as opposed to how companies work. The two are linked, but not the same thing. The stock is not the same as the company. And so I got to learn from really wonderful people like Luis Yamada and Ralph Acampora and Phil Roth and countless others who've been really good at kind of steering me in a new path. And as Alex said, we were both kids in the organization over a decade ago, and got to hang out a bit. And then I've spent most of my career talking to institutions about the need to hire people with a CMT designation, what technical analysis adds at the institutional level for risk management, portfolio construction, position sizing, macro analysis, understanding intermarket relationships, all the rest of it. And so Alex and I have had a real passion for education. And we've also learned at the right hand of really smart folks who've been doing this for a very long time through multiple market cycles, who have real experience. And for all of them, the thing that we took away was that they have rules. They have a process. And that doesn't mean that it's all algorithmically traded. In fact, most PMs that we work with are discretionary in their approach, but they have a system in place and their checklist of how they look for when a trend has begun and when it's coming to an end. And that sort of gave birth to the GoNoGo charts, right, Alex?
Yeah. And it was all from every aspect of the industry, whether you're talking to somebody new to technical analysis that's getting confused, just trying to learn, or whether you're talking to somebody who's really sophisticated, maybe a sell-side research analyst that's got a very strong process in place already, but then is having difficulty explaining that to the buy side, or even sometimes confusing yourself with your own analysis because of by the time you've gone through this really sensible process of creating an analysis that makes sense and is logical, and you've stepped through your indicators to come to a conclusion, you've overwhelmed yourself with indicators and you've got analysis paralysis and your chart's too complicated. And we see it all over the place, from people new to the industry to people that have been working in the industry for a long time. So that's where the GoNoGo chart idea came from, was to take the checklist, or my checklist of working with people throughout the last 15 years, what I think has value in terms of what I would add to my chart, but then blending it into something that color codes the trend color codes the price bar based on the strength of trend. And so then you can really see the security move through trends without cluttering your chart with indicator after indicator. And then you can still hopefully look at price itself, which we all know price is super important. It's never restated, not an estimate, all of the things that you can say about price that we stick to, but you can still see it clearly and then do things like support and resistance analysis on the chart. You can look for important levels. You can look for higher highs and higher lows. You can look for those situations where the market is telling you what's happening in terms of supply and demand and the dynamics of the market. You can still see it because you haven't overcomplicated the chart. So that's sort of where it came from, and the idea for simplifying all of the technical analysis that we build into a process into an indicator that doesn't clutter the chart.
Got it. Yeah. So let's talk about that indicator real quick. What are we seeing here? It looks beautiful. It's striking. What is it saying?
Do you want to run through the colors?
Yeah, let's talk about the colors, Alex.
Yeah, the colors is really, if you can understand the colors, you've got it all down, right? That was the whole goal, was to put it as simply as possible. And for me, it was talking to an oil trader and then a PM and then a fund manager, and just making sense of the trend and being able to have a conversation with 10 different people in 10 different industries throughout the course of the day. So the colors are: bright blue is the strongest go trend. The aqua color is sort of still a go trend, but weaker. The amber bars, we call them the go fish bars. One of Tyler's favorite quotes is from Jesse Livermore, which is time to go long, time to go short, time to go fishing. So when we can't identify a trend, we call it the go fish bar, which is that amber bar of uncertainty or neutrality where there's no trend identified in either direction. And then in the bearish side of things, you've got the no-go colors, which are pink for the weakest or the sort of weak form no-go, followed by the purple, which is the strongest form of the bearish trend. So really, we can go through those 5 colors. We can get a sense of where we are just by looking at the colors in the price chart.
Got it. Is there a particular time frame that you find works best with this particular indicator, or is it just kind of whatever works for you?
Well, we don't tell people how to invest. We work with traders. We work with day traders. We work with long only mutual fund managers that might be rebalancing every month or every quarter even. And there is, like all technical analysis, we're really big believers in technical analysis, and it's fractal by nature. So you can apply sensible technical analysis to any time frame and any security where there's data history. So we certainly do work with people that are trading the E-minis on 1-minute bars, and then all the way out to people looking at weekly bars only, because they're not rebalancing their sort of portfolios any quicker than once a month. So that will be an individual preference, and definitely something that, depending on your risk appetites, you can certainly go down or up in time frame. But what we do recommend, and we do work a lot with clients, is that idea of multi-time frame analysis, where you have a bias based on a larger time frame, and then you might dive down into smaller time frames to secure the best possible entry. So that is certainly something we do, but also we do with clients using different time frames depending on how they approach the markets.
Got it. All right. So we've got SPY up on the chart. We always like to start with one of the major indexes. So let's go ahead and start here on SPY. Talk to me about what you guys are seeing on it.
Yeah. So It's been chopped around. I mean, we were talking about it today. We were recording this morning, and I think it was a blue bar, right, Tyler?
That's correct.
Yeah.
So there's a blue bar at the start of the day, and then it turned into a pink bar.
Correct.
So it went.
So two things to point out about the charts. One is that when the period has closed, so these could be 5-minute bars or they could be weekly bars, as Alex said. They don't ever change color when that period is closed. But during the day today, it's reflecting in real time where the market's at. And so what Alex was describing was that blend of lots of technical indicators, all the computation is done behind the scenes. But the reason that we're blending all those indicators is because the pros are looking through that checklist to say, is this market in an uptrend or is it in a downtrend? Is there more risk than reward? And so we've found that the valuable work of trend following investors has been really influential on our career. There's a lot of folks infinitely smarter than Alex and I who have spilled a lot of ink around the persistent anomaly of momentum. There are a lot of quants who have backtested a ton of technical indicators to understand that in conjunction, capturing the meat of the move, trend following is a really successful process for a lot of investors who are disciplined enough. So again, that all comes back to the behavior. So what's represented on the chart at its most simple level, when we're in those aquas and blues, it means that the weight of the evidence, all of those items in the checklist are saying this is a go trend. If you think about a shuttle launch, right? We're go for launch because the conditions are ripe for a successful deployment of capital or successful deployment of a shuttle and a payload. When it's in a no-go, right? If you already own a position there and it switches to those pink and purple colors, it means that all of the weight of the evidence is setting up probabilities against you. You don't want to be in that trade when it's in a no-go. So at the very simplest level, you could think about owning green and blue bars and selling out of pink and purple, right? And like the Jesse Livermore quote says, there are times when the market is a bit indecisive and you might just want to stay clear of those. So maybe, Alex, if we can shrink it down and just look at a little bit more history on that daily chart, you can really see the run up into 2022, and then the fact that as that trend topped out, right, we would have exited there in September of 21, and you can always buy back in. I think a lot of, certainly my business school professors, a lot of fundamental investors and pros out there, they really can't get their mind around the idea of getting out of a position and then getting back in. And I think that's a really outdated idea. We're in a frictionless market, right? When you're trading ETFs or even individual stocks, there's no commission that would suggest you need to stay with a trend that's working against you. So those trend followers that taught us to cut our losers quick and to hold our winners as long as we can to get those outsized gains, these kinds of charts, GoNoGo trend is going to let you be a patient investor, stay with something long after it's reached your profit target, if it's in that kind of durable, persistent trend, the kinds of things that we saw in 2020, but then also help you get out in periods, because we didn't know in September of 21 if that was the end. Like, are we at the precipice? Are we heading back to COVID lows? Nobody knows. If they tell you they do know what's going to happen in the future, you should probably run the other way. But you could get out and certainly buy back in when it comes back to the go trend. So just looking at the right-hand side of that chart, 2022 has been a choppy mess, right? We've seen a lot of rotation and weakness in the indices themselves. And so that no-go trend has really been persistent through the first quarter, and we were just coming back into a position where we would want to own more U.S. equities. But obviously, as Alex was singing before this show started, sometimes you're the hammer and sometimes you're the nail. Today has been a wide range, highly volatile. As you mentioned this morning when we were talking to our other clients, it was a blue bar, and certainly we ended the day really heavy.
Yeah.
So I think part of what I'm curious about curious to know more about is, like, how do you judge? Yesterday you would have said, oh, we're entering into a possible go trend. We're in a kind of like the lower form of the go, right? And then you get whipsawed today. You get totally smacked. how do you make the assessment that, hey, it's time to pull the trigger here? Hey, it's time. I need to sit and wait a little bit longer. Is there, I guess what I'm asking, is there a certain number of like green and blue bars that you would want to see before saying, yeah, the trend is actually kind of sticking? Or do you find that it's best to enter as soon as you see that trend change? Like how do you go about thinking entries and exits based off of the colors of these bars?
Most importantly, it would be to follow your rules. So we would say, get in at a go trend, get out at a no go, or when it breaks out of that go trend. So the way I would have traded the SPY, if that was my only holding, you're in those amber bars after that large run up. I mean, record breaking 10 days in a row in March. When we're in that amber period, if you are particularly risk on, you could get in at a neutral level to see if you get in there early. You've got a really well-defined risk level there, and obviously you stick with it through that go trend. You're right back to where you entered when it gets back to a neutral level, and at that point, I mean, I would be out, right? And back in at that new go, and that was 3 days ago. Today, would have caused some pain, right? We would have gotten out again at the close of the day. We're back into a pink, weaker form of the no-go trend, and we're right back to where we started 3 days ago. But again, we've minimized any losses, right? We're exiting at those levels. So when we catch a durable trend and you can stay with it, that's when you get those outsized gains. There are going to be periods. This is what makes trading so difficult, is sticking to those rules and getting whipsawed, getting back out right where you started, or at a very small loss. That's no problem. We can handle small losses all day long as our profit ratio, when we capture a trend that's really durable, we have to be patient enough to stick with it, right? We can't be second guessing ourselves. We have to stick to those rules. And what Alex and I found, particularly with people trying to learn technical analysis for the first time, seeking out those silver bullets or that one perfect indicator, they end up putting everything on their chart. And then if you're like me, if you get enough lines going, you can convince yourself of whatever you want. So maybe it's, Russia's invasion of Mariupol. You're like, it's definitely not going to continue. Well, that's your opinion. It's not exactly showing up in price yet, right?
Yeah. And I think there's a couple of things, Jason. Like, one is going back to that sort of idea of multi-time frame analysis. If you're somebody who's got a shorter time horizon, you may have been during this period here dropping down to like a 15-minute chart to take goes, and you'd have been making money during that section of the chart. And then when it turns to this, now you're not taking those entries on a shorter time frame chart. So that's what I was talking about before. The multi-time frame analysis certainly helps you out there. And then the other thing is that I think Tyler was hinting towards it as well. If you've got everything, a lot of people do that. They put everything on the chart and then they put everything into something that they think is going to be the win that wins. And people are always surprised, or when I talk to them and I say, well, how much are you risking on any one trade, right? And so there's a trend somewhere. We always joke about the Jimmy Buffett song. Is it a Jimmy Buffett song, right? It's 5 o'clock somewhere. I don't know, but we sort of turn that into, there's a trend somewhere. And I think that the idea of diversification, and if you're looking at the rotation between sectors, like this year so far, we've been talking about energy and being in commodities. And so if you are only looking at the S&P and trying to trade it, that's being choppy. But if you were looking at sector rotation and you've been long some oil stocks, some gold, maybe some materials, some builders, and things like that, and maybe you'd even been shorting some technology, some communications, some discretionary, since you saw that rotation between the sectors since the beginning of the year, that's what you need to be doing to be successfully trading the markets. I think people sort of say, oh, I've got it figured out. I've got these 12 indicators on my chart. I'm going to put it all in Apple. And then they're like, well, but then the next day it went the other way. You need to be careful there, I think, as well.
Right. All right. Well, so we've spent some time here on SPY. Let's keep on moving. Let's start ripping through some of these charts, get some of these requests in. The first one we've got is going to be Microsoft, MSFT.
So Microsoft is often looks similar to the markets, right? Because the technology, the big stocks drive what you see in the SPY and in the S&P. So we had these really strong trades in technology when technology was driving prices higher all the way through sort of the last year and a half. And then this year so far, technology has been an underperformer. And so we would have been out, or we would, people could have even been taking short trades during this correctional period. Now, technology has been underperforming on a relative basis to the S&P. And so this go trend that tried to get going for technology, and in this case, Microsoft, rolled into a no-go quicker. And we've been in a no-go now on Microsoft for just over a week.
Hey, Alex, you just said something that maybe we should pause for just a second. You're talking about relative strength performance, different from the relative strength index or an RSI indicator. A lot of people confuse relative strength with RSI. Can you just show a ratio chart of the XLK versus the S&P 500? And what we're doing is just dividing the sector by the index, right? So how did the sector perform relative to the overall index? So when we talk about relative strength, it's not the absolute price movement, it's the ratio of the two. And I'm sorry if I'm not talking down to anybody, but 10 years ago, right, you got to ask these questions. And so when we're talking about relative strength, we're just looking at a ratio between two securities, and they can be any securities, right? You can look at gold to Bitcoin or equities to the US commodities index. It doesn't matter. It's going to show you which one is leading. And even if both are going down, right, or both are in a downtrend, we can see which one is sustaining a little bit better through that bearish regime. So XLK over the S&P 500 throughout 2020, right, the stay-at-home trade, tons of relative strength and absolute performance, right? Tech stocks, and really it was 9 names that led the whole market. Remember, the S&P 500 index is a cap-weighted index, so the correlation between those very popular 9 mega caps tech stocks and the overall index was very, very high. And as growth equities tended to underperform, right, we're seeing this huge leadership from energy that started in 2021, but it's only 3% of the S&P 500 index. So we're seeing some outperformance from areas of the market that really are very small representations of the overall index on a cap weighted basis. So yeah, you got that up, right?
Unfortunately, we do not have ratio charts on TrendSpider yet.
I am so sorry.
No, it's quite all right. It's quite all right. I believe that they're coming, but they're not available yet.
Well, I'm glad I could step in that huge turd. Sorry about that.
No, it's all good, man. It's all good. All right. So we're on a week no-go here on Microsoft. What would get us bullish, and what do bears want to see? Give us 2 scenarios here.
Yeah, well, so given that we talk about all the time the fact that you can leave the price chart uncluttered by blending the technical analysis into the colors, to me, this sort of support range that you can see with the crosshairs pops out, and I'd be really concerned if we get lower than where we sort of was supported here. And if you looked at the closes during the clustering of closes around these levels, so if we were to go lower than this sort of level, we'd see that no-go strengthen. And that would be certainly an indication that the bears are in control. We'd have to get some good price action going to try to reestablish the go trend above these levels. But it looks the weight of the evidence is in sort of the no-go camp at the moment. That's what I'd be looking at, this level of support here.
Okay, cool. So kind of maybe we'd be looking for short below that 280 level, and then to go long, we really need to see at least some weak goes. Yeah, a couple of weak go candles before we start making any assumptions that it's time to go long again.
Yeah, absolutely.
Okay, great.
And ultimately, this is a big range. So if you're looking at the top of the other end, to be really long-term bullish, if you made some price action up here that started to get us into go territory, you'd then be looking to see if we could take out these highs from back here. But that's the 2 sort of extreme scenarios.
So this is a daily chart. Why don't we drop this down to an hourly, just to I'm sure for a lot of the folks on the line, they're looking at shorter time frames, and if that's your game, that's great. Technical analysis is fractal. It works the same way on any time horizon. So this is the hourly, right?
Yeah, this is the hourly. We saw the strong move here and then the strong move down. And this is what I was talking about before with that multi-time frame analysis. We're in a week no-go for, let's say, the last 7 or 8 days. You're only taking no-goes on the shorter time frame chart. So you wouldn't be worried about getting whipsawed here because you wouldn't be looking for goes because you're a no-go on the daily. So you'd be no-go here. You wouldn't be getting whipsawed here back into these goes, and then you'd be looking at a new no-go on the sort of last hour of the day. So you might be looking to get back into a no-go here, especially if we break below on this chart. We got some support levels here. So that's what we were talking about before. If you've got like once the trend gets to, enough time, really a week's enough time to then go down in time frame to be looking to trade that shorter time frame.
Yeah, when we break it down into this smaller time frame, you can kind of really see the extent to which a trend can persist for a period of time, right? Like if you go on the daily time frame, you can have a purple bar and then a pink bar and then an orange bar and then a green bar kind of like right up on top of each other. Whereas here on the hourly, we can see that when it's in that go trend, it stays that way for a period of time. It really lets you know, like, hey, this is working, stick with it. And then towards the top there, you get that change of tone with those purple and pink bars. And even though price does rally back up to those highs, that change of tone suggests that something might on the bigger time frame might be occurring. Is that how you would read that?
Yeah, absolutely. I mean, we talk all the time about the 4 trades, right? The big win, the big loss, the small win, and the small loss, and they're all okay except for the big loss. Right. So if you were here on the hourly chart, you've got a really good win, and then if you maybe small loss, and then really big win back down the other side. But you might only be taking certain trades, so limiting those, cutting out some of those smaller wins and losses because you're only trading in the direction of the larger trend. But as soon as you see the trend indicator struggle to maintain its colors, and you also, you can be as aggressive as you want, right? As soon as you see weakness, this is weakness in the go trend at a top. And you've got this trend in place. You see weakness in this trend here. You can go down to a 5-minute chart to try to get a good entry, a good exit, or however you want to do it there. But you're absolutely right. Once the trend takes off, they persist, and that's what Tyler was saying at the beginning about the meat of the move. That's the trend following.
Well, just consider that for a second. These are hourly charts. If you're an intraday trader and the hourly is sort of your longer time frame, right, you're sticking with that for 2 weeks in March. A 2-week trade for a day trader is a long move.
A lifetime.
Right? That's big time. And so,
or if this is your like you said, this might be your long-term time frame. You could be taking 5-minute entries throughout that period to sort of try to be buying in all of these dips, right, which on an, they're all the same, right? If you take the periodicity out, you have no idea whether this is a daily chart, so if this is your longer term time frame, then the 5-minute chart might be getting you some good entries every time the hourly pulls back. And so, you're always trying to, depending on somebody's risk appetites, work with them to set up something that makes sense.
Got it. All right. So you said something that I want to address, but I want to get into the next chart first.
Yeah.
So let's do that. And it is Twitter, an interesting choice.
No way. People want to know what's happening with Twitter? I haven't heard anything about it at all.
What are the odds?
And this gets to the point, right? Like the narrative machine is working overtime. Is Elon making a bid for the whole company? What's he going to do with it if he takes it over? What does the board seat mean? And why did he reject it? Who cares? Look at the price on the chart, right?
Right.
Yeah,
absolutely. And this is another example of personally, obviously I'm a little bit maybe partial to the GoNoGo chart, and I apologize for that. But for me, studying back in the earlier days of my time in technical analysis, I was so fascinated by the fact, and it is a fact, that the chart represents the price action in terms of market supply and demand. And I was fascinated by that. That is what we're seeing played out on the chart. And so for me, I really got into pattern analysis and identifying key levels of support and resistance, because that is that tug of war between the buyers and the sellers, and it's all shown on the chart. So for me, what jumps out on this chart is that this gap is just monstrous, right? So it's a huge gap, but you can see it very, very clearly because you don't have 5 panels shrinking price, so that you know it's harder to see. So this, we all know, right? The gap should be support. There should be we know that gaps tend to fill, but we also know that the bottom of this gap should be support. So we saw this, you know, this incredible run down in this no-go trend. We often find the go fish bars are a bridge between transition between trends as trends reverse. So that would have been an interesting moment. And if you can eyeball the trend line that's on here, and you could see that the amber go fish bar broke that trend line. And we often also find anecdotally that trend color change happens on breaks of important things or important levels. So we'd have seen an amber bar creep in on a break of that trend line. That would have been really powerful for us. And then it, of course, turns into the go colors, the aqua and the blues, and then the gap up. So now we'd be looking at this to say, okay, can these go colors hold? Even if they go into weaker go colors, will we find the support in the gap that we would expect? And then, you know, we see where we go from there.
So let me ask you this. It's just a kind of a random thing that just came to my brain. Is it common to see strong goes during consolidation periods? I mean, that the past 8 bars here are pretty tight. I mean, it's a relatively wide range, maybe $5 or something like that. So maybe a 10% range on the name, but like it's still pretty tight price action. Is it common to see strong goes in that format?
Well, yeah, it can happen because there's so much going into the calculations behind these that if you think of like the closing prices here are higher than the closing prices were here, and you know, how does that translate into price relative to its moving average, or how does that translate into price change from a certain number of days ago, or you know, whatever else we're looking at into this in this chart. Perhaps we were catching up with some sort of trend concept here that we then have now recovered above. And so, yes, we will see weakness in consolidations, but often this is actually, for me, this is actually quite an encouraging one because they are kind of back to back. We're seeing weakness, aqua bar, and then strengthening. And now we're seeing some strength come back in. The closes are higher here than they were over here. So perhaps we're putting in a higher low. Right. So even those basic, like the further you go with things, it seems like the simpler things tend to work. And you know, if you just look at the chart, if we're putting in a higher low here, that's good. We've got a higher high, and then if this is a higher low, we can start to visually say I'm identifying a new trend in that direction. We had lower highs and lower lows all the way through here. This is a higher high from down here, and now we're putting in a higher low. So if we can hold this, then I combine that with the fact that the trend conditions are telling me that it's strengthening. It's quite a nice picture here.
Okay, awesome. Let's keep on moving.
Jason, there's a fantastic veteran analyst named Walter Deemer. If you guys are on Twitter, give him a follow. He's hilarious. Walt Deemer, and incredibly insightful. And I get to host a podcast with the CMT Association called Fill the Gap. And Walt was one of our very first guests. He said what he learned in the go-go years of the 1960s, which there are a lot of parallels, right? Like the growth equity investor boom. And he said, we watched their feet, not their mouths, meaning you watch where funds are flowing, not what people are talking about. So on this chart of Twitter, right, who knows what cocktail parties in Silicon Valley were happening where somebody may have known that Elon was thinking about making a bid. The gap up is when he bought 9.3% of the company. That's what causes a gap up, is a major boost in demand over supply. But what we're seeing in the digestion on the right-hand side of the chart is the market's reaction to all of that news. And I was being a little dogmatic. Of course I care. I'm human. I'm following the story with bated breath and biting my nails because I'm fascinated by the whole thing. But we don't really care what my opinion is on the whole story and whether that's good for Twitter's fundamentals. But we can see that investors clearly are seeing there's some strength in what might be coming next. So.
Yep. Cool. Right on. Let's keep moving. Next round. Tesla, of course. Yeah.
What a theme, Jason. What a theme.
What a theme. Well, look at it. Still, I mean, actually, after the day that it had today, I'm impressed that it's still a strong go.
Yeah. Yeah. Well, that's also what you're hoping to see from trend following, is that one bad day shouldn't alter your long-term chart. And we talk about multi-time frame analysis, and when we present, we go all the way back to Charles Dow and talking about the primary trend, the secondary trend, and then the minutia that doesn't really affect anything. And if you are a trend follower and you got long based on the fact that you saw the trend change, you're not freaking out necessarily about today. I mean, it was a bad day everywhere, but the trend is in place. And if you think about things like, what's the most commonly put indicator on a chart? If you had to,
I would say I would probably say simple moving average, maybe like the 200
simple moving
day.
average,
simple moving average.
Day. So if this is a 200 day, if you just imagine it, is that price still above a 200-day moving average? Probably.
Yeah, I would venture to guess it is.
Probably, right? So, if a day like this doesn't throw you below the moving average, and Paul Tudor Jones, I think, right, said everything he looks at, he gauges everything by the 200-day moving average. And so that's not going, and we used to work with clients, again, it depends on the audience, but we used to work with clients where their whole portfolio management was based on the turn or the slope of the 200-day moving average. If that's positive, then they're investing and they're long the market. So you don't want to just jump ship because of a bad day. Now, if you were a intraday trader trading 5-minute bars, you could be making a ton of money shorting that if it had been a good no-go all the way down since the beginning of the day. I don't know, but it's still a go trend, like you said, surprisingly, but still a strong go trend. So that's telling me that all of these conditions that we built into this, we're still seeing strength, and actually, sorry, I hope I'm not talking too much, but
keep going.
The day we had today wasn't enough to force any of our inputs. Right. So that's actually something in itself.
Yeah.
So any kind of reaction tomorrow, we'll feel pretty good about the strength of that trend, because a day such as today wasn't enough to do much damage. And we closed higher than we closed yesterday, and we closed higher than we closed a few days ago. So,
Alex, could we pop that out to a weekly just to get a little more perspective on what's happened with Tesla longer term? Right?
Like
unreal.
Yeah, you talk about staying with the trend, and obviously that's sort of the goal for people. If you need the big wins, and people call them all kinds of things, but you need those big wins. Right. And you've got people that are selling out of Tesla, somewhere in here, because they're like, well, and I would talk to people that they say, yeah, I got out of my Tesla position somewhere where it was consolidating, and I'm, you ask why, and they say, because it's gone up so much, and that it's crazy, because we talk about, we teach actually part of the CMT program, we teach about behavioral, the psychology of human behavior, and we are so much more willing to lock in a profit and take a profit than we are to just lock in a loss. So we let our losers run much lower, because we can't deal with, the pain of losing is far more than the joy of winning, right? So we take profit as soon as we see it, but we hope that the losers come back. And so taking profit halfway through a trend, you're going to kick yourself later, but hopefully, something like this will allow you to stay in the trend a little bit longer.
Got it. Yeah. And, I wanted to ask you, you guys, you've popped up a secondary chart on the bottom once or twice here.
Yeah.
Can we talk a little bit about that secondary chart?
Yeah. So this is sort of just as we keep this for this kind of thing for presentations, and to just talk about, let me put we were just looking at that weekly one. So let's have a sort of a look at the weekly, because this is what we're doing with clients, and this is what we are hoping a strong checklist allows people to have confidence in their decision making. And if the chart, if it goes the other way, it goes the other way. You get out because it broke your rules, but you can give yourself an intelligent framework within which to invest if you stack the odds on your favor, right? You put the weight of the evidence on your side. So this is just an example of a chart that you might create with somebody when you're first walking through or learning technical analysis. And I've got things on here like Donchian channels, which are automatically showing higher highs and higher lows, or lower lows and lower highs, depending on the trend. I've got a moving average, of course, the infamous moving average here, and I've got Bollinger Bands, and I've got volume, and I've got MACD. And so I'll step through a chart like this and sort of run through a checklist with somebody new to technical analysis. And I'll say, look, is price above the moving average? Yes. Are we breaking out of a Bollinger Band that was narrow? Because of course we trade a Bollinger Band differently if it's narrow versus wide. Is volume confirming what you're seeing in price action? Are we seeing a new high on Donchian channels? Is MACD and its signal line above zero? And is the MACD crossing above the signal? And if we go through that checklist, and this is just a simple checklist used as an example, we can say yes, 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 yes. And at some point over here on the left side of the chart, we can feel fairly confident that we've identified a new trend in price, because all of the things that we just ran through as we learn technical analysis are telling us, yeah, we're seeing a lot of these trend ideas line up somewhere around here. And so we'll say, okay, we could sort of say we're identifying a trend here. And so that was the kind of the genesis for the idea, was to turn that into something that just showed you when that happened without you having to put all of this stuff on the chart. And just as an aside, there's a lot more in this chart than what was on that chart that we just showed. But that's the idea. When all of those things that are my technical process that I've been using and working with clients for 15 years, when all of those things line up, then my bars are going to go blue. And so instead of having to look through that chart and find the area, find that specific point on the chart where all these things are lining up, this is where I identify a trend. And we had one amber bar in here that sort of said, hey, not sure what's happening, but then we went back into trend. So this is that weekly chart. But yeah, that's sort of the way.
The way I would think about it, Jason, is unless you're a Formula One driver, you don't really need to understand all the physics behind an internal combustion engine to drive a car. You need to understand that there's brakes and gas and a steering wheel, and occasionally use your turn signal, right? All of that other information is really helpful information, and it's imperative to getting the vehicle to go where you want it to go. But when it comes to making driving decisions on the road, do you really want a 6,000 page manual on how the car functions, or do you just want to know how to make it work?
Yeah, that's a great analogy, because I love car racing, and as you'll know if you've seen any of my presentations, but the Formula One cockpits are just insane. They have buttons like
let's start our British friend off on the cars.
Like, no, but to your point, the drivers just get told, they're always on the radio with the team, and the team will say, okay, Lewis, go to package 3, and he just hits the button for package 3, and that changes the whole setup of his car, and that's all they need to know, right? Go to package 3, or let's go to whatever mode of the electronics that we need now, and that's a great analogy. Except that they're all going electric, so we don't need to know anything about combustion engines.
Yeah. So then, in this analogy, the modes are really time frames, right? We're using different time frames.
Yeah. Or okay, we're a go on the daily, we're a go on the weekly. Things are lining up, so go to a 60-minute to look for entries.
Yeah. Got it. All right, let's keep moving, guys. Let's keep moving.
Let's do it.
Next round, Netflix. Ooh,
oh yeah,
the dog.
Haven't looked at this chart today.
Oh my gosh. So go long. Is this what it's telling me?
Objects in motion tend to stay in motion, Jason.
Yeah, don't what is it? Catch a falling knife. Yeah, this is the Netflix chart. And again, like Tyler said, you don't know what's going to happen, but for whatever reason, we were in a no-go trend since the end of last year, and we same situation as not, but the complete opposite of the situation with Twitter in a way, where we gapped down big here. We know that this gap is going to provide probably resistance, but it might try to fill it, but it stayed in the no-go trend, stayed in the colors. And again, it's all based on your horizons, because if you're shorting here and it rallies like this, you're thinking that nothing works. But this is the daily chart of Netflix, and we stayed in the no-go, continued to move down, had a couple of amber bars, no-go, 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 super strong, and then of course another gap down. So
So in a scenario like this, are you looking left to try and figure out where price might find some support, or are you just sitting back and just staying out and saying, you know, I'm gonna let GoNoGo kind of speak to me when it's time?
So again, it depends on the client and how aggressive they want to be. Like for us, for me, this is my chart. So I'm going to look at this and I'm going to use this chart to tell me what the trend is. But we will often talk to people that say, look, I'm seeing support over here. I mean, I don't know how far back you'd have to go on this one to find the support, but you know, let's say they say, okay, I know that there's support at 200, let's say. And then when it hits 200, if they're seeing weakness and we see pink bars, then you may step down a time frame, and that client may look for an entry. And in fact, it's a similar situation. I was talking to a friend of mine in the UK who has lived in both Australia and the UK, and he was looking at the GBP to the Australian dollar, and he was telling me, he's like, look, I just feel like when it gets to 1.72, that's about the bottom of the range. So I said, well, then go down in time frame and look for an entry, because you can have your thesis, and you can have your thesis, and you can use the charts in any way that makes sense to you, as long as you follow the rules on your time frame. Like if he was wrong, he would have got out, but he went down to the hourly level, got a go on the hourly, and then prices ran 1.16, 1.176 or something on the hourly. Now that whole time, it was still a no-go on the daily. So you know, there you go, right? The daily was no-go. GBP is in a no-go, but he's like, I think there's going to be a little bit of support around here. I want to scalp over the next maybe 5 days or so and see if I get a bounce. So don't just buy, but because the hourly could say, no, it's no-go on the hourly as well. Okay, stay out. But if you get that go on the hourly and that's your thesis, then at least you're giving yourself peace of mind and saying, I think it's going to rally a bit. And so I'm going to use something that tells me, hey, it might be a go for launch right here on the hourly for that idea. But so again, if you have a reason to think Netflix is going to rally, maybe you go down in time frame. But yeah, you don't. There's no reason on this chart.
What I found fascinating was that on Wednesday it was down 37%. And that was the first time that 39 out of the 40 fundamental analysts on Netflix, so the TMT sector analysts that cover Netflix, first time that 39 out of the 40 downgraded from a buy to a hold. Wow. Not even to a sell. And so, I mean, just think about the three of us. If we're trading this, I don't know what's going to happen over the coming months, but when we're up there at top left of the chart and it changes from aqua to amber to purple no-go, right? Like, cut your loss, you're out, right? It's a no-go. I don't know what's going to happen, but I certainly don't want to risk the idea that I'm going to hold on to this, hoping that it comes back.
And if it does come back, that's your small loss.
Right.
But the one thing that we do a lot of work with institutional clients is like, it's not even about for some of them, obviously for some it is, but it's not even about necessarily big wins or beating the market. It's about avoiding this drawdown. If they can tell their clients they avoided this drawdown, right?
Yeah, it's a win.
Hey, I made 5% so far this year, but I avoided this drawdown, right? Like that's as big as anything to a lot of people that we work with.
It's true. All right, let's keep on moving, gentlemen.
Yes, sir.
Next round, Calm, C-A-L-M. I don't believe that we have gone over this name one time yet.
Cal-Maine Foods.
Oh, it's pretty.
Yeah, it's a nice looking chart. Yeah, that's great.
That's all you need to know. It looks great.
But it is to that situation you were talking about before, where you things don't go up in a straight line. They step up, they move in waves, right? And so you saw this correction against the trend and the weakness in the aqua bars. And you could be saying, okay, if we break below perhaps this prior high, or maybe there's another reason that you've got for sort of protecting this capital that you've earned. Oops. You might be looking in here and watching it closely, but then boom, we go back and we strengthen and we're in blue bars again. So you've hopefully stayed in that position.
What about anything on the smaller time frames to look at, maybe like the hourly or something?
Yeah, sure. So like you could have been hopefully looking in somewhere in here as a buy the dip. If you go down in time frame, there were probably some entry opportunities. you know, like over here somewhere. This, hold on.
So not to get macro, but Cal-Maine, I had to look it up just now. Cal-Maine Foods is an American egg producer. 25% of all the eggs that we eat as Americans are produced in Jackson, Mississippi. This is the inflation trade, right?
Yes, it is.
Food, commodities, and whoever the folks on this show who are voting this up are obviously paying attention to the trends, right? This isn't a growth equity company.
Right.
This is eggs.
All right. So this one's looking great. Simple as that.
Boom.
All right. Cool. Let's keep moving. Next round. Ooh, PLTR.
Oh.
This is a Dan Ushman favorite here.
This one made a lot of people a lot of money in 2020.
Alex,
so,
if you wouldn't mind, drag the chart to your.
There we go.
Yeah. There we go. Sweet.
yeah, I mean, these were, you know, right up there with ARC, right? Made a lot of money in 2020 for people, and then have been really troublesome since sort of the end of last year. But some strengths emerging here. You know, again, you're getting some chop here, but we've put in a higher high and we've come out of this no-go. Again, you can imagine this trend line that was broken on these amber bars going into aqua. This is going to be important now to see if this is a sort of a false hope kind of situation, whether it'll roll over, because this is the kind of situation I would imagine from looking at the weekly, that this is going to be a no-go on the weekly. So you may be not concerning yourself yet with these trades. If you're long-term thinking about Palantir, you may be actually waiting for it to roll over and take another no-go. But if you are somebody that thinks that it's been beaten down enough, there's definitely some technical environment change happening here. And so we'll wait to see if what happens if this amber bar can get back into the goes or if it rolls back over.
So I just remembered a question that I wanted to ask you on another ticker. What do you say about, or how do you feel in instances specifically like this one, where you have a pretty diverse variation in candle color? You see from green to orange to pink to green to orange, like in succession. When it's in a strong trend, it's staying purple, it's staying pink and purple, or it's staying green and blue. What have you guys found about, or what do you think about a scenario like this where you're getting these like really indecisive signals? One candle's a weak go, the next candle's a strong no-go, the next candle's go fish, you know, like, how do you guys feel about that? How do you read it? Is it best in a scenario like this to wait for a trend to present itself?
I think it goes back again to this is a trend following indicator, and you can imagine that if you are, would you, I guess the question is, would you or should you be looking for longs on a tech company when we know that the tech sector is underperforming the rest of the market? So generally speaking, when we work with people, we start macro down, and since the beginning of this year, we aren't really advising longs in the tech space just yet. The tech space is underperforming the rest of the market. And so, you know, we hope that some of our clients might have taken a short because technology was underperforming. But right now we're still seeing that the trends are in materials. They're still in energy, and commodities are doing well. Utilities, the defensive sectors. So we would be leery of hoping or looking for this to turn into a strong trend. So we'd be, you know, that's, I think, how we approach it is we sort of think of the security itself and say, okay, but relative to the market, or the sector relative to the market, what are you actually seeing on a relative performance basis? And so if the markets are going up, but this is going less up, right? Like that whole idea of relative strength, then, you know, we wouldn't be sort of expecting somebody to be looking aggressively to get in. So then you might say to somebody, okay, well, look, let's wait and see if it breaks above this resistance level, right? This resistance level here that you see kind of carries across here. And if you notice, we didn't close above this level, you know, it's certainly not twice in a row. So we came right back and closed below. So we might sort of be then going to that kind of analysis and saying, look, we need to see this get into a consistent go trend, a stream of blue bars, and we'd like to see a new higher high set in above these resistance levels. But I think it comes down to sort of, you know, fishing where the, what do you say, Tyler?
You got to fish where the fish are.
Fish where the fish are, right.
I think you hit on 2 points. One is the same sort of process and checklist that you've got for managing trade risk, managing individual trades. You also apply that same process in your analytical work from the top down. We publish weekly research and daily ideas and all of that to help guide our clients through that process. So we want to look at intermarket relationships. We want to look at each of the sectors so that we are picking areas of the market that are performing the best, so that when you get a go signal, you've got yet more weight of the evidence, more tailwinds at your back. And the second thing that I would say to your question, Jason, about amber, neutral, the light green, and the light pink, all of that is showing us that this stock is trying to find a bottom. There's a tug of war happening between buyers and sellers, and it's never extreme go, extreme no go, back and forth, back and forth, back and forth. That's not the way the indicator's built, because there is some sensitivity in there. But if we're just looking at, you know, the last week and a half on Palantir, that's the struggle between buyers and sellers, and it's quite indecisive. So I'd turn back to Jesse Livermore's quote and say, I'm going to go fishing on Palantir until it can prove that it's got the strength of a real breakout.
Got it. All right. Awesome. Let's keep on moving. Actually, okay, so we are at an hour. How are you guys feeling? We haven't gotten through a ton of names here. I'd love to crank. I'd love to crank through
some quicker if you want. Yeah.
Let's do a lightning round.
Let's do a lightning round here. Next round, Abby V, ABBV. Maybe for the lightning round, we could just do like very quick, weekly, daily, something like that. Like just a couple of times.
So hopefully you're holding it. That's the daily. We are seeing some weakness here though, and we would want to see if it remains in a go trend on the daily. Weekly is also looking, I mean, that's a very nice little run right there, looking strong on the weekly, but again, seeing weakness. So we're seeing weakness now on 2 time frames. But if you are looking to buy the dip on something like this, you might go down to the hourly. And right now you wouldn't do anything. You'd wait until you see some strength on the hourly. So this is a great example actually, Jason, of how you might do that kind of thing. You're seeing a go trend on the weekly, but it's weakening, hopefully consolidating and hopefully holds. You're seeing the same thing on the daily, a go trend, but weakening, hopefully holds and consolidates. So if you're looking to buy the dip, you need to see some strength on the shorter time frame first. Otherwise, you're just buying blind, right? So right now, no go, no go, no go, still no go. We'd want, if you're looking to buy the dip because your larger thesis is that we're in a longer term go trend, then you'd wait to see this turn into a go trend to give you that confidence that you've put everything on your side.
Awesome. All right, let's keep moving. Next round, Disney.
Disney. My friends just went to Disney.
I mean, with Netflix taking a hit, Roku taking a hit, I have to assume Disney isn't looking all that great either.
Not looking strong, and just from a basic technical analysis perspective, making a new lower low. So at new lows on strong purple no go bars. Disney not looking.
Disney's also not just a streaming company, right? This isn't just Disney Plus. Their theme parks are making massive margin at like 80% capacity because they still haven't filled their parks. And so it's a fascinating conglomerate company, obviously still in a no-go trend, right? We're not arguing with price. But I think there's a lot of people who associate it just with the streaming service, which is just one element.
It's amazing because people used to associate it just with the parks,
right?
But the whole business model has changed.
Right.
To that extent.
Yep.
All right. Strong no go on Disney. Let's see. Next round. MP.
Materials. So this is interesting. So this would be, I guess, a bit of a concern for us as a materials company in a sector that's outperforming. So this is some sort of the kind of analysis that you can do. You would expect to be seeing strength Like if you just quickly, I hope you don't mind if I quickly go to the XLB.
No, go ahead.
Just to have a look at the sector. We're seeing stronger price action relative to the S&P. You know, the S&P is sort of fallen heavily, but the material sector has actually made a higher high. Of course, today just crushed everybody, but the material sector outperforming. So to see, I'm assuming that's a materials company, MP. I might have totally jumped the gun there, but it said materials.
No, it is.
It said materials.
Yeah, they mine rare earth metals. Yeah.
Like, says materials in the name. Sorry if that was a bit hasty, but yeah. So that's interesting that it's fallen out of trend and making a no-go bar.
Got it. Okie dokie. Let's keep on moving on. CVE, Synovus Energy Incorporated. Gotta assume it's strong.
Yeah. It's had a nice, this is that beginning of the year trade. MRO, CVX, XOM. XOM not, I don't think quite as clean, but that XLE trade, since the beginning of the year, that's when we saw that cyclical shift from into the value sectors, from the growth sectors and energy, materials, builders, industrials. We saw that sort of cyclical change to the value sectors. And so, yeah, this has been a strong play, and it was a bad bar today. But if you look at it in the grand scheme of things, we're sort of back to these highs from a few weeks ago. So Go trend still in place, but an aqua bar today.
Yeah, and you can kind of see based off of the past, 6 months of price action, this is pretty normal. It extends, it pulls back for a couple of days, and then it continues to extend again. So then maybe your out here is if you start seeing some of those orange bars or you see a pink bar, then you start going, okay, maybe we're changing trend here.
Yeah, and that's the Tyler's point from earlier. These okay, so maybe if you were aggressive and you were really trying to protect capital, you get out on one of these amber bars. Well, that's a shame, but hopefully you got back in 2 bars later, right? So that's that idea of following your rules. And if this had turned into a no-go, that you'd have avoided that drawdown. We don't know, like Tyler said again, we're not trying to predict. Anybody that says they can predict the markets, that's a tough one. We're reacting to what price is doing. And so even if you get out here, you've protected yourself against the potential risk of a no-go trend. And then if you get back in, no harm done. Other people, if they're going to be a bit more conservative in terms of getting in and out of trades, may hold ambers and actually wait for the no-go, right? Because the amber is neutral. And so, yeah, but it of course is quite likely in a trend, you move up and you come back, you move up, you come back. And so we show that weakness in these corrections, but if it holds, then you're still in good shape.
Is there any scenario that just like either totally freaks you out or totally makes you go, oh, I got to get into that immediately? Like if it goes from, let's say, a strong no-go to a strong go or something of that sort. Like, is there any like flip of one signal to a totally different signal that makes you go like that, that just it brings a strong reaction?
You want to talk about the IWM, Alex?
Sure.
Right. So last year, small cap equities stuck in a trading range, finally broke out to the upside. Right. So this isn't even go no go. This is just a classical technical analysis, range bound, and finally broke to the upside.
Right.
Obviously on a go trend, all signals on, and immediately reversed, crashed back into the range and then below the range. So the way Alan Shaw and folks who've been doing this since the 1950s, they said from failed moves come fast moves. So to your point, Jason, if all of the evidence, if all of the trend computation, all the combined indicators are saying go, and it breaks out of a massive range and everybody's piled in, supposedly piling into this trade, we're all excited about, all right, small cap equities are off to the races. And then it doesn't work. That's a short. That's a hard short. Right? Okay.
I was gonna say the other end of the spectrum that you said at the beginning. Is there anything that scares you? Well, it's meme stocks. Because you can't get away from them. But at the same time, you hope your technicals still work. But you've got these moves that are just so many percentage points that unless you are able and willing to play with those kinds of risks, they should scare people. You know, you can be up and down such an incredible amount on a percentage basis, but the technicals still work, right? No go on GameStop, some neutrality, and then no go continues, and now you know, rallied strongly enough to put in a new high and go bars, and we're consolidating above levels that were resistance. So, you know, we'd be looking to see if there's any opportunities to re-enter and if the trend holds. But sorry, that wasn't supposed to analyze GME, but those on the flip side, you know, when it was all Dogecoin and GME and 20, there's like, whoa, man.
Right. Sure.
Whoa,
Sure.
tough,
I get it.
tough.
I get it. It's kind of like
Definitely.
NFTs now.
The technical side definitely works better on these stocks than the fundamental side. I'm not sure what fundamental analysis would tell you it was going to go from $6 to $250.
Right. Right.
Well, and that's when I was working at Bloomberg, we got sorry for one more story, but we got so many clients who were Bloomberg lifetime, you know, using all the wealth of information in Bloomberg. And then when we had 2008 and we had that, you know, nasty, equity markets lost 60% of their value. That's when people started calling in and saying, hey, can you teach me technical analysis? Or can you, that's when people wanted to learn, because no fundamentals can say that it made sense for the entire equity markets to lose 60% of their value. Like how bad were and could earnings have been in the last quarter? That's not what it was about at that point, you know. So price does move. And the other thing we always, you know, we talk about in intro to technical analysis is look at the price of a stock every couple of years for 20 years and then compare that to its earnings, right? Why is it trading at $100 and then at $20 and then at $50 and then at $70, you know, when it's making relatively the same amount of money from a fundamental standpoint. So yeah, that's when you see these giant swings, fundamentals, it doesn't explain it all. So there's got to be something in price.
Right. All right, guys, let's hit a couple more. And then we'll close it out here. Next one is NVDA. I know this guy is on shaky ground. Yeah. Ooh.
Yeah.
It's not what you want to see.
No, and you know, bad bar, right? Because you know, we were looking at a couple of stocks where today's bad bar didn't really threaten the trend or didn't really push us below prior lows or prior closes. Well, the bad bar today put us at new lows, right? So it's a different looking situation for sure.
Yeah. Okie dokie. Let's keep on moving on. Energy fuels. Interesting.
Yeah, that's interesting. What are we on a daily? Yeah.
So what about on the weekly?
Weekly, let's see. Yeah, stronger on the weekly. More severe corrections than a lot of the energy stocks that we've been looking at. These corrections actually pushing them to amber bars and actually pushing it even to a weekly no-go there. And on the daily, you're at an inflection point. So testing these lows.
And looking back to the left, right? Potentially an area of strong support.
Yeah.
Right.
Polarity.
So what Alex means by that is that support becomes resistance and resistance becomes support. Classical technical analysis. For anybody who's interested in some of those terms, right? CMT program gives you all the education you need about how to read these charts and use these tools. But polarity is a really well-researched process, because all of the behavioral psychologists have told us about prospect theory and about how people anchor to specific levels. And technicians have been seeing this for 100 years on charts ever since they started in the rice pits of Osaka, Japan. And a lot of Nobel laureates talking about why this happens.
And it all makes sense. Let's keep on moving here. Next round, AMD. I believe this one's kind of in a similar spot as NVDA. Yeah, it's actually a little bit more progressed, huh?
A little more progressed, yeah. And again, this is the kind of thing where on the weekly, you'd be probably in a no-go. So you probably would be ignoring the go on this, at least hopefully, unless you had a reason to believe that we're going back up. But failing at the prior highs here and a lower high than this high, and then now we're at the other thing, just to mention, which hit me like a ton of bricks when I was first starting out, was somebody said, don't let the bottom of the chart fool you into thinking it's support.
Right.
can always go lower, and don't let the top of the chart fool you into thinking it's resistance, because we were since back in 2008, bear stearns never came back, right? Like, it doesn't mean there's support down at the bottom. It can go lower. So
I mean, I think one of the key takeaways here is multiple time frames. Like,
yeah.
that almost didn't even occur to me initially either, but that is really, really important for this indicator. Take a look at whatever your biggest time frame is. If you're a day trader and your biggest time frame is the hourly, start there and whittle down.
And I would venture to say that it's for technical analysis in general. If you're looking at this period on the chart, you might be saying, oh, price has crossed above its moving average. That's great. That's bullish. And then this happens. Mm-hmm. So keep in perspective, whatever, we'll try to, we love GoNoGo charts, but any good technical analysis is good technical analysis, but you should keep in mind that multi-time frame, because there's got to be something happening here that was looking bullish, whether you're looking at a GoNoGo chart or not. It might've been breaking above a moving average, closing 15 closes in a row higher, whatever it is. This was looking bullish on a technical analysis perspective. So then look to the weekly chart and see if that makes sense. And also, set your risk management parameters, have your stops. Maybe your stop is, okay, if it goes to a no-go, we get out. Or maybe your stop is something sensible in terms of prior lows as a stop. So, whatever the technical analysis is, I would argue that multiple timeframes will really, really help there.
One question, talking about stop losses, and this is good, or this makes sense for entries too. You're always waiting for the close of the bar? Is that correct? You're waiting for the close of the bar to find out what color the bar is before you're making a decision one way or another?
Right, but remember, those bars close on different time frames. So
right,
you could be saying the daily, I want to get in, so I'm going to go to the weekly and see if go to the hourly and see if the hourly bar closes at a certain certain thing as well. But yes, I mean, that's not us. That's technical analysis. That's why people put so much weight on the close. The closing price is used in every indicator. That the closing price used to be interpreted, or still is, but as the final agreed price of the day for that security. That's what the market, all the participants in the market, they closed it at that level. So there's a lot of weight on the close. So if today, for example, right on the SPY, if you didn't wait for that close, you'd have been in the blue bar at at lunchtime. Right. So yeah, there's a lot of weight given to the close for that reason. It's the agreed upon price to end the day of trading for all the market participants.
Right on. All right, let's hit two more here and then we'll call it an evening. That sound good?
Yes, sir.
Sounds great.
Awesome. All right, Snap. I believe they had some lousy earnings after hours. So it might even look worse than this. I'm not sure. Ooh, so kind of another in an interesting spot. You've got that big bottom that if it breaks, we're in trouble. Yeah. If you click on the little clock icon, we could see what it did after hours, because I'm pretty sure they had earnings. Yep. Mm-hmm. There you go. New lows.
And we're through support. Yep.
Seems like it's rallied though quite a lot during the.
Yeah. True. Couldn't see that little hash. Gotcha.
Yeah.
All right. So an interesting one to be watching for tomorrow.
Yes.
Okie doke. Last one, guys. And it's Home Depot HD.
I spend a lot of time at Home Depot.
What? You're not a Lowe's guy? Come on. Home Depot. What are you doing?
I love these trades. I love the home improvement trades through the pandemic. It seemed like everybody was remodeling, and so we saw really strong trades here, and then it's turned around obviously, and this has been a rough start to the year.
Everybody returned all that broken merchandise that got delivered to them.
Yeah, I don't know. I don't know. I don't know why I've been frequenting Home Depot more than Lowe's. You sort of took me back there. I'm sorry, Tyler.
I shouldn't be so hostile. It's late at night. You have your Home Depot.
I think it's the orange versus the blue. I don't know, but
Yeah.
maybe I should go to Lowe's. It's the blue, it's the go color.
It also might just be the distance. Maybe you take one extra turn to get to Lowe's.
Yeah, maybe we have Lowe's everywhere too.
So, I mean, I think the point with these charts is that if you have a rules-based approach, right, you're going to be whipsawed at times in the market. But we don't know, you don't know, nobody knows what the future holds for Home Depot. But where it turned into a no-go and you exited your position, you saved yourself all this downside headache. And it was like early February of 2016. A couple folks from the board and I had called Jerry Parker to ask him to come speak at a conference. And market was super volatile. I don't know if you guys were trading in February of 2016, but
I was at that conference.
Yep. So I called Jerry Parker is one of Richard Dennis's turtle traders, very famous trend follower. And Bill and I called Jerry. I'm sorry to bother you on your cell. I know things are really hairy today. He said, "Oh, my systems are in place. I'm chill. I'm cool as a cucumber." Right? Doesn't care about the volatility in the market because he trusts his rules. He's letting those systems run, right? So I'm not telling everybody they got to be algorithmic and systematic about everything that they do. But if you trust your rules, then you don't have all that headache when markets do become really volatile. So,
right.
Simplify, simplify, simplify.
Yep, that's the way. Well, Alex, Tyler, this has been so much fun. We cannot thank you enough for taking time out of your busy schedules to spend with us going over the GoNoGo indicator. We do very much appreciate it. Where can all of our viewers find you guys?
GoNoGoCharts.com is the website. Got more videos like this, samples of our research that goes out to subscribers. You can learn more about the chubby dad band blues crew that I roll with upstate New York. You can learn about Alex's tennis career, all the important stuff, and also learn how to trade.
Are you guys on Twitter?
We are on Twitter at Charts GoNoGo.
Got it. Awesome. Well, again, thank you so much for being with us tonight. I know I speak for everybody watching. This has been really, really helpful. We're loving the GoNoGo indicator on the platform. We've been getting lots of great feedback from our users about it. If you are a TrendSpider user and you have not tried the GoNoGo indicator, now is the perfect time to pop that thing on your charts. It not only looks beautiful, but it also helps you figure out what the heck is going on in the markets. If you're not a TrendSpider user, now is the perfect time to become one. We are going to be back again here on YouTube, Talking with Traders. Dan is interviewing Julia Cordova next Tuesday at, 8 p.m. Eastern time. And then we're going to be doing another one of these chart requests live with Versus Options on Thursday. So please do join us for both of those events. Again, gentlemen, thank you again for being here. It was so much fun. We had a blast, and I really look forward to talking to you guys more and maybe doing this again in the future.
Anytime.
Sounds great, Jason. Thanks so much. Thanks to Dan and the whole team. That what a beautiful implementation. Really, really nice.
Absolutely, man.
Great chart.
We're honored to have it on the platform. It's great. So have a great night, guys. Everybody watching, have a great night. Profitable trading, and we'll see you next time.
Sounds great. Thanks, Jason.
All right. Take care.